Hello, welcome to the Invest in Value channel. I am Victor, and in this video, I'm going to analyze the investment of a one-bedroom condo. It's specific in a community where I currently own a condo and own another one-bedroom condo nearby. So I have a little over 10 years experience owning and renting condos in this area. And I wanted to analyze the proposition of adding an additional property to my portfolio. Before I go on, do me a big favor and like this video, consider subscribing to my channel, and hit that bell to receive notifications when I release a new video. Now, let me tell you about the area and then tell you more details about this property and do a full value analysis. First, Tustin, California is a great place to live. It's centrally located in Orange County, so it's near many different jobs. It's a nice, safe community with a lot of things to do. And again, I've owned condos in this area for over 10 years, good rental rates in this area, and there's big demand for rentals. So there's a couple of properties out there that are available, price ranging from $525 to $565. I'm going to go with the lower amount for the analysis, but there's just a few properties out there. We'll see if inventory picks up throughout the year. Now, the three rules of real estate are location, location, location. And this place is in a great location. It's a part of a golf course area. This is Tustin Ranch Golf Course, and this unit is located in a condominium complex that adjoins that golf course. Nearby are shopping, down at the marketplace in Irvine, as well as Tustin, close to a Costco. There's also some really nice parks. There's Peters Canyon and then Irvine Park just to the north up here. With regard to commuting to work, you're centrally located in Orange County. So you can get to Irvine quite easily. You can get down to John Wayne Airport quite easily. You can get down to South Orange County, in 20, 30 minutes. And then you're just south of Los Angeles. So I've even known of people that live in this area that take the rail up to downtown LA for work. But you're right there in the heart of Southern California. Okay, so I did a fair amount of analysis on this property, and I used a lot of details. And instead of going straight to the details, over the first 5 years, you'd be losing 7% per year. If you held this investment for 10 years, you would make on average 8% per year. Main reason is you're allowing the asset to appreciate for more years. Over the long haul, the asset, really performs better because you've had many more years to allow the asset to appreciate, and you would have a rate of return of 15%. And then 30 years, close to the same, you'd have an annual return of 14%. All right, let's take a look at the 5-year model first. Let me explain a few of the inputs, and then we'll get into the details. So first, I'm using 5.5 as the interest rate you would pay on a loan, and the discount rate that we'd make on the net present value. Purchase price of $525,000. You'd put 25% down. You'd have 2% of purchasing expenses, right? These are points. If you've been through a couple of escrows, there's 10 different items in there that are going to cost you money. Also important to consider, there's two growth rates that I'm going to use. First one is how fast will this real estate asset appreciate or depreciate. I'm expecting in year 2 and 3 that this asset will depreciate negative 5%. Long term, after the first 3 years, I use the average appreciation rate in real estate, which is 5.4%. So that's really what's used going forward. And I'm very comfortable with that. So on the rent side, the first 3 years, I'm using a growth rate of 6%. And then after the first 3 years, I'm using 3%, which is a rational level of increases, right there with the traditional average inflation rate. The inflation rate right now is 7%, so 6% for the first 3 years. would be a good number in my mind. All right, so looking at the model here, we're looking at each year and how many items you're either paying for or you're receiving, in this case, rent. First, rent. I estimate that this condo could be rented for $2,200 per month. Year one, you have to put down 25%. So 25% of 525,000 is 131,000. So that's money you got to come up with, and capital you have to put into this investment. You're going to have expenses for year one. This is 2% of that buying price. You may have to put on an investor loan. It's almost given you're going to pay a point. You're going to pay some closing. You're going to pay some lending fees. You're going to pay closing fees, title fees, and so forth. Beyond that, you're going to borrow 75% of the purchase price, and you're going to be paying interest. And I have a full schedule of how much interest you're paying per year below. Property taxes in Orange County are 1.25, and that line is there. It goes up a little bit over time. This is the association fee on an annualized basis. That'll go up over time. Maintenance, don't underestimate your maintenance. A big ticket item here or there, really pops up that maintenance cost. We have a heat wave in Southern California, and one of my condos, I've had to get the air conditioning fixed. As a matter of fact, that was yesterday. And I'm looking at, a permanent fix to that air conditioner, because it has an older unit, is about an $8,000 new system. So those kinds of things come up. I think they, over time they kind of even out, but don't underestimate your maintenance. Insurance is, this line, not too high, because when you buy a condo, the association fee kind of covers part of your insurance costs. So it's nice to have an association. They maintain the exterior, they maintain a lot of things with regard to the property, and they give you exterior insurance and some liabilities as well. So taking a look at all those items, this line here is, net rent amount, or I should rebrand it as net cash flow. Year one, you're really, a lot of capital is being put into this property to just have it. And it's a very committed investment. You can't get out of it very easily. You'd lose a lot of money if you got out of it very quickly. And then year two, it's still cash negative, but each year it keeps getting better and better. But the first 5 years, you're not cash flowing. It's not positive cash flow. And if you were to sell it in the first 5 years, you didn't allow the property to appreciate much. And again, my forward thinking is this property is going to go down in value, because just the market's so darn high. Interest rates are so high that you would come out behind on this, buy and hold for 5 years. I think you'd lose money. So that's what's behind the model there. The 10-year model is a continuation of the 5-year. The first 5 years are identical, but years 6 through 10, the thing you see is the accumulation of your appreciation for your real estate. That's why real estate's a real positive investment. If you looked at my portfolio, real estate's number one in value. It far exceeds everything else. Number two is stocks, but real estate, it's a nice set it and forget it, passive appreciation, asset. So you really see that appreciation beginning to add up. You also see that your interest expense keeps going down because you're paying down that loan. Or I should say, the person who decided to rent your property is paying down that loan. So that's a nice thing. The other fees, the other expenses go up with time, right? There's an inflation there. And then your rent is going up in time. The rents today are going to be quite a bit higher in 10 years. So you're seeing that appreciation over 10 years on your rental income. So looking at the 20-year and the 30-year models, they are continuations of the 5 and 10. The 5 and 10 numbers are identical. And then the 30-year, these just take, the periods further into the future, and just to show how much better the numbers look over a long period of time. this property in 30 years, just if you extend it, will be worth 1.7 million. You'll be, collecting $66,000 in rent. That is the future, right? Things will continue to move up in price. And that's why over time, real estate will reward the real estate investor. But again, back to the reminder, why not have your cake and eat it too? Have a great investment that over the next 5 years, at worst, it's like a zero loss, and really trying to achieve, hey, I want to make money in the next 5 years in case I have to sell that asset. If something comes up in life, I can sell that asset. Why not go after that scenario? That's the only scenario I invest in. Why kind of give up on the first 5 years in any investment? And those are the 4 models. All right, so let me recap my analysis of this 1-bedroom condo that's for sale for $525,000 in Tustin, California, and take it through my scorecard of whether it's a good investment or not a good investment. And the first principle is, am I getting a discount on this investment currently if I buy it? Second is the asset performing well? And then third, would I buy that investment today? Really looking at the investment saying, would I buy and hold that investment today? And I try to take all my investments through that once a quarter to see what I want to, keep, what I want to invest more in, and what is, ready to sell off. Either it's performing poorly or I've achieved, the appreciation that I was looking for, and it connects with that investment. So the conditions that exist in my investment analysis for this 1-bedroom condo, the past performance, meaning the last couple of years, real estate has gone up really fast in pricing. So no big secret. There's scarcity of real estate and prices just went through the roof. And going back even further, prices have been going up since 2010, year over year. So we've been in a very long upward market with no corrections. Inventory was super low and interest rates were incredibly low in 2021. At the same time, affordability was very low because prices were so high. So looking at 2022, interest rates went up 40% since the beginning of 2022. 40% is a huge increase, and they may go up even higher. So that, I think, is putting a lot of pressure on prices because monthly mortgage payments are going up very fast. So whether it's somebody who's buying to occupy the property or an investor, it's going to put downward price pressure on real estate in 2022, 2023, and so forth. Inventory is still extremely low, but if that changes, again, pricing will come down, in my opinion. Affordability now is extremely low with high prices, high interest rates. It's just affordability is even worse than it was before. And it is definitely a seller's market at this moment. It is April 10th, 2022. My outlook for this year, as well as next year, there's no meaningful gains to be had in real estate. This type of real estate, residential real estate that you invest in to rent it out, in my opinion, for the next 5 to 7 years, it's just the numbers are not there. It is not a year to invest. You'll have to wait a long time if you bought a real estate asset today. Like I showed those models, we're talking 10, 15, 20 years to get a return. And I would say, well, you will have your capital tied up for many, many years, over a decade, in order for you to get to a return. That's really, really risky. What if something comes up in life and you need that capital back? You'll have to take a loss. It's a very long-term commitment that just seems too risky to make. Really, the next 3 years, we're in very treacherous waters with regard to investing in real estate. I think there's a lot of things that could go against real estate. And you already have a few things that are going against real estate, and that's going to correct the market downward. I am a seller this year. I sold one property, single family residence. It, the prices just got so high that I had to take that one off the balance sheet. I sold at a very good gain, and I'm very comfortable with it. The pricing that we're seeing today is just frankly ridiculous. So I took that property off the balance sheet and took a big gain, and I put a lot of those funds into bonds as well as some good conservative stocks. So scorecarding this single 1 bedroom, 1 bath property condominium selling for $425. This property, are we getting a discount on this property? And the answer is no, we're not getting a discount on this property. You're getting full price, you're competing for this property, and you're not going to get a deal. Is the property performing well? I think so. I think rents are great way to get cash flow from your asset. So I think the asset is performing well. Would I buy this investment today? Absolutely not. So please keep in mind, my videos are for entertainment purposes only. I'm not recommending that you buy or sell any stock, security, or asset. I like sharing my experience as I invest in real estate and other investment asset types, so that I could share, my experiences with others. So thank you so much for watching my video. Do me a giant favor and like my video. Consider subscribing if you like this video, would like to see more videos like this, and consider clicking that bell to get notified when I release a new video. So thank you so much, and good luck investing in 2022.